With the market at all-time highs, that September slowdown never happened. Now that October is almost here, could there be a change in the market? Today we have 3 different perspectives and 3 different insights on how you can best manage your investments this October. Let's dive in. We have a great panel today to talk us through this. This channel is all about different perspectives, and today we have 3 different perspectives here to talk about whether this October slowdown could actually be coming. We have David Eifrig and Matt Weinschenk with Stansberry Research both here, and Rob Spivey with Altimetry. Thank you all so much for your time today to have this debate/discussion about what's going to be happening in the market this October. Let's start with September. What happened with this? Typically, we see a slowdown. Why haven't we seen that?
I mean, I think the biggest reason why was the Fed, right? I mean, the change in tune from the Fed that came out, and basically when Powell came out in August and said, hey, we really are going to cut rates, and we finally understand that employment is our big issue, not inflation. That whole entire thing in terms of really giving the market an understanding of, oh no, the runway is really here for us to have rates cut and what that means for the economy and turbocharging the market, I think that was a big deal.
Yeah, and you just had everything lined up. You had momentum, you had good earnings, Fed cutting rates, job numbers were good. So September is normally the worst month the last 25 years, but you need a catalyst for that, right? It's not just going to turn around just because the calendar flips. So there was no reason to really expect it in September, and it's been a great month.
I agree. I think that the elements Trump brought to it over the summer, winning a couple of court cases, getting sort of this recognition that some of his ideas and policies are actually being put in place by companies, that this is legitimate money flow from G in the economic equations that it's going to be devoted to the economy. So that's here. Yeah.
Well, it's a good look back at September, but I think what every investor actually wants to know out there is what's happening in October. Like you said, the market is typically very, very low in October. Can we keep going at this crazy high momentum? So let's just talk about October. What are your expectations for October?
Yeah, so I ran the numbers, guys, if you don't mind. So you hear 1907, October crash. 1929, there was an October crash. 1987, global financial crisis, 2007, started in October. But that's all old news, right? Those are old markets. And if you look at the last 25 years, October is a good month, right? There is seasonality in the markets, but I like to find a structural reason for it. Like all those things happened in October, but it didn't matter that it was October. But if you look at quarterly index rebalancing, that's an actual structural reason. If you look at August is typically slow because Wall Street goes on vacation up to the Hamptons, right? That's a reason for markets to be slow. And my favorite one is December is a middling month, normally, last 25 years. But if the market's up at the start of December, December is a good month. If the market's down, people say, well, I'm going to sell these and harvest the tax losses, and that drives the market lower. If it's up, they don't have to do that. So I like to look for a structural reason for those monthly arguments, and I don't see it for October. And I think October will do just fine as far as the seasonality goes.
Yeah, I mean, I actually think that what, Doc, you said earlier when you were talking about G and what was going on with the government, I think that when you look at October, the biggest story is going to be earnings, right? I mean, obviously, we're finally getting into Q3 earnings, which is going to be a material thing, and that's normally a really good catalyst one direction or another. And what we saw, which was really interesting that happened in June and July, because we have our earnings call forensics work, which is this technology where we actually are analyzing whether management teams are getting more confident and giddy about their outlook, and they're going to invest more in everything else, or whether they're a little bit more stressed and anxious, and they're going to be focused on cost cutting and everything else. And at the beginning of the year, everybody, if you guys remember, when November the election happened, right, the market took off because everybody goes, oh, this administration is going to do deregulation, they're going to help all that stuff. And then what happened in the front of the year was every single management team, because they were throwing curveballs for tariffs, curveballs in terms of regulatory change and everything else. Everybody, when we were watching our earnings call forensics work, they were all pulling back. They were nervous, which is why we kind of saw a hiccup at the beginning of the year in terms of actual corporate investment. But we saw in June and July, which is important for Q3 investment, was management teams started to get more confident. We agree with you. It looks like investment is going to really show up in a big way, not just AI, but broader in terms of real corporates willing to, and that's going to be a catalyst for the market going higher, not rolling over.
I'm hearing kind of a bullish look from both of you on October. Doc, do you have a different thought on what could happen?
Yeah, I think I do. I just want to point out to your listeners, if I might, what he's referring to, this forensic thing, is fascinating. They use really spy technology to listen to earnings calls. So they actually take what the CEO and the CFO is saying analyze it, sort of elements of voice modulation, cadence, to come up with these patterns. So it's legitimate, real stuff, and that's in Altimetry. It's
Exactly.
Altimetry,
Yeah, exactly.
So always fascinated me when I first met him and his partner, Joel Lippman, I don't know, 20 years ago now at a conference in New York City. You know, econometrician, accountant, I'm really kind of up against it, but I'm just a simple guy. I look at things like, there's a thing called the Buffett indicator where you take GDP relative to stock price or stock prices relative to GDP, and that's at all-time high, guys, all-time high. So the question is, what's the path, right? And so things like price to sales are the highest. I think they're like 99th percentile. PE, just plain old, flat old, boring PE that you probably don't pay much attention to because you have some other trickery in your accounting sleeve. And then the Shiller PE, which kind of smooths price to earnings ratios, that's also at the 99th percentile in investing time. So for me, that's a time to be super nervous. And then I look at and it's not the whole market that's up at those levels. It's really concentration of a handful of stocks, these big stocks that are in the AI space. And I don't want to pretend that I'm this old fuddy-duddy, but AI is still not here, and it's been promised since I was in medical school 30 years ago, where electronic doctors were coming just around the corner, and it will eventually happen. But just the other day, I was looking up, have you heard my story about looking for Michelin restaurants in Philly? And the answer it gave me two names and said they were Michelin starred, and then at the end of it, it said, in fact, they haven't started Michelin star ratings back in Philly. That's not coming till 2026. So all this infrastructure spending, all this build out, you know, is it real, or will there be this like a moment of, okay, wait a second, government doesn't have tax funding, companies don't want to do the CapEx quite yet, because some of this shakes out. I mean, how many different AI platforms do you use? What do you use?
4 or 5.
Yeah,
4 or 5.
3 or 4. Yeah,
And
exactly.
you guys know this. Eventually, you get to maybe an oligopoly of 2. So there's 3 that are going to be dead in 5 years.
Yeah.
So that will hit at some point. So I'm not saying there's going to be a collapse in the market of 40% tomorrow, but I think you're going to get a gigantic pullback come year end. I think inflation could still tick up from some of the stuff that's gone on with tariffs. And this one indicator that I've used forever, can't call it a taxi indicator anymore, but it's an Uber indicator. All the Uber drivers that I've been in the last 2 weeks are complaining about how slow business is. And I'm not writing in Uber X. I'm writing in the upper one, the Uber Black, that's...
To your Michelin star restaurant.
To my Michelin star
Exactly.
restaurant. No, it sounds like I'm snobby, but it's really, it's a channel check. They're the ones that are moving people with money around. The Uber Black is the higher end SUV, it's safer. And they're all complaining regularly to me about how bad it is.
And I think just to jump on that, I think, Doc, there's an important thing to talk about, because I agree. There is definitely a 2-speed economy going on right now, right? Where you talk about the consumer, and then you talk about the idea of AI investment right now and corporate investment, where they have become bifurcated. And at some point, they have to come back together. Now, I mean, I think that we think that probably there's more runway there, but that certainly is something that everybody needs to be paying attention to in terms of, look, the consumer, if you want to talk about your biggest risk out there, you know, between student loan debts and everything else, is the one looming thing. Like we think that it's become a small enough part of corporate profitability, not GDP. But I mean, of course, I totally agree with you.
Yeah, interesting.
Some of these factors that you talked about, the more basics of the economy to look at, you take a much deeper dive into this approach at looking at what's the value of the dollar, what's happening with all of these things in one of your latest reports. And I do want to put that up really quick for our viewers to look at. Doc and his team at Stansberry Research and at MarketWise have really done a deep dive into what is going on with the US dollar and some areas of the market that are seeing a lot more growth right now. So you can scan the QR code now or click the link that's right in the description of this video to get that report right now and take a deeper dive kind of into Doc's view on where the market could be headed towards the end of the year. It's a fascinating look. You definitely don't want to miss this report. We have a lot more to talk about though, guys.
Thank you.
There's more to talk about this October and what to expect. I want to jump off from the AI investing. I think we've seen Broadcom go up over 14% in one day. We've seen Oracle, other stocks just taking these huge jumps, and they are already massive companies. I think that the fear that we're hearing from some people is, how much higher could this go? Or is there a logical pullback coming? And how big could this pullback be? So let's talk about some of those huge stocks that you were talking about that are driving all of this market growth right now.
I think the AI spending is exactly the thing to watch to know where the market is going to head, because it is AI sentiment that is powering the market higher. And these companies have all been given license to spend hundreds of billions of dollars to no reward just yet, right? So if you want to say data center spending is, you can pick your number, it's like 400 billion. There you go.
About right.
And about half of that is, when you're building a data center, about half of that is the infrastructure, the cooling, the building, and half of that is just the GPUs. GPUs last 3 to 5 years, so they're burning $50 billion a year on these things. 5 years later, they're going to have to replace all those. And they're not making any money. They are making not even near that in revenue. They're actually losing OpenAI, Perplexity, wherever you want to go on this thing. They are losing money on AI. Now, Microsoft, Meta, Google, Alphabet, whatever you want to call them, they can spend that money because they're making it in other places, but AI is extremely unprofitable. And the market has just said, okay, we're gonna give you a chance here. Because if you look back at the internet, same thing. There was no value creation. And of course, it eventually did become profitable. But in the middle, there was a 90% drawdown when people lost faith in internet stocks. So logically, we shouldn't be spending on AI right now, right? But the sentiment around it is such that the market is giving these companies the leeway to pursue this investment. I think at some point they're going to say, we want to see the returns. That's not going to be October, probably not. That would be pretty amazing if we could say that. But at some point the market's going to say, we want to see the returns on this spending, and sentiment can shift. And that's the biggest risk overhanging the market. But I can't tell you when the timing is on that.
And I mean, so what I would say is, one, right, we all know momentum is the most powerful factor in the market, right? And so right now, we've got these companies who are having phenomenal, not just stock momentum, but earnings mo. And I would actually argue that when you think about AI investment, if you break it apart, so when you talk about, there's the ChatGPTs and the Perplexities in the world who absolutely are not making any money, to your point, and they are huge money pits. Eventually, I think that they're going to be, we're all going to embrace, to your point, Doc, they're commodities, right? I mean, but when you actually talk about Azure, when you talk about, for Microsoft, when you talk about what Meta is doing with AI, I mean, Meta and Alphabet have been AI monsters for 12 years, right? I mean, when you think about it. And they are actually making money on AI. And so I think that, to your point, they can fund it. And they understand that this is probably the closest that we've ever gotten from an economic perspective to having a zero-sum game, where whoever gets the final spot first, the final place first, is going to win. And that's why I think that all of them understand we need to be investing in it. And that's why we're going to be able to see that continued fuel. And that begets the whole entire momentum factor that we're talking about, right? Because that feeds on itself in this really strong way, which is why, I mean, yeah, to your point, we think that AI investment is so important right now, and it's unlikely to slow down because of those big factors. And so that gets the idea of, that's why you can see in a Broadcom pop 14, an Oracle pop 40%, right? Because of the fact that people understand, no, the companies that are actually moving fastest are the companies that are keep on going to see this flywheel go, and that's going to carry earnings momentum and price momentum forward.
It's really interesting look at the fact that the largest companies that are seeing this growth, they have the money to fund it and they are making money. So I think following that revenue is so important for investors who are looking at where is the growth in AI going to continue. Doc, I am curious to hear your perspective on the AI stocks too. Do you think that this crash is coming, or a pullback in any way is coming, or do you agree more with the momentum look at AI stocks?
It's funny, Rob said something that triggered a thought, but to answer your question, I mean, I prefer sort of laughing at the idea that AI is doing anything fantastically great at the scale with which money is being thrown at it. But Amazon, in the last 5 years, if you were going to return something on Amazon, you were acting with an AI agent. Like, you don't have to. And that AI agent, when you try to return something, it looks at your buying record and sees how many you have or haven't returned. It decides, oh, this guy really buys a lot. Oh my goodness, they have a family, nice person. Oh yeah, absolutely, we won't make them return the object even. Or here's a free return label. And you don't have to talk to a person. You're interacting with an agent instantly. Amazon is already doing that. Google is already doing that. So we're seeing it where people are applying it and using it. It's starting to happen in medicine. There was just a study recently where they applied and tested doctors, and for the first time, the agent or the virtual doctor was better at diagnosing stuff than internal medicine doctors. Now, they've been trying to do it with x-rays, radiology, that's right there on the cusp. So it's starting to happen for sure. I just think that at the fringe, to your point, would you say the dot-com era, the collapse of 95%, you can go back to the railroad business and the railroad industry, there's stuff in between there. Yeah, you don't want to own the mass, you want to own the companies, and that's why stock picking, looking at this, how would you not want to own Amazon? Like Amazon, you're using it every day. Peter Lynch's kind of mantra, if you're using it, it's working for you, you'd be proud to have that as your own business. Oh my gosh. So there are places where it's working, it's just not, that's kind of my thought.
There's still room to grow for this.
Yes.
I think that we've had such a good conversation. There's a lot of ways directions we could go in this conversation, but I don't want to take all of your time. So I think that the last piece to end with here is talking to our viewers out here about what to do. So as you're making your plans for investing in October, do you chase the momentum? Do you wait for a pullback? Do you have cash ready for that inevitable crash? That's the big question, and I know that's a loaded question, and no one has a crystal ball in the room, but what advice would you have on what action to plan for as investors in October?
Gosh, to plan in October, make sure you get outside, enjoy the leaves.
That's great advice.
I'm serious, people. I'm serious. These guys know me. I am serious. You don't know me that well yet. But look, you've got to contemplate what sectors of the market are really beaten up over time. We have a letter, Prosperity Investor, that deals in the healthcare space. We've been clocked and killed by not really thinking about all the things that are happening and changing in healthcare deeply enough. But there are things, Roche, for example, Lilly, these guys have drugs and chemicals that turn, for example, I think Lilly has an oral formulation coming out that in combination, the cancer is cured in 5-6% of people, and it's an oral pill. And you give it with another drug that's oral, and then the cancer can't mutate. Against one drug, that was the problem with HIV meds, one drug it can mutate and come back. But if you take 2 pills, the odds of that happening for a cancer cell of this specific types, that's right here. And so if you're sitting there in October looking for stuff, I would say contemplate the healthcare space for places where these companies that, again, similar to an Amazon, have other drugs they're making money off of, so they have cash to fund their stuff, and think of them as a biotech fund because they know where the research is and what's next and what fits in their pipeline. And Roche has been a long time successful pattern at that. And then again, I like Lilly for one of their new oral drugs coming too. But I don't know if that helps.
That very much helps, and I think that this is a sector that's kind of been beat down a little bit. That's definitely on the low end right now. So rather than chasing the momentum, this is looking for some value in the market.
Yes.
A good outlook for our viewers.
While you're outside in the leaves in the sunshine.
Pull out your phone and look really quick, right? All right.
And I think to broaden that healthcare point, I think you should stay invested. I think there's a ton of momentum in this market, and there's a lot of good signs. But I worry that there's so many people who have kind of come to investing, they're attracted by this bull market, and their portfolio is 5 AI stocks, right? That's what worries me. I think you need some healthcare. I think you need some international. It's the most boring lesson in investing that you need to stay diversified. Everybody says it. But now's the time. Like if you have your retirement account in the S&P 500, you're 30% AI stocks already, right? So don't get too caught up in the specifics of this momentum. There's a lot of opportunities out there. International, like Cambria Foreign Shareholder Yield Fund, FYLD, I love that one. Don't get too caught up. We saw it happen in 2021 with cryptos and tech stocks, and they came down 80%. We talk about .com, that was only 4 years ago. So just be a little cautious because it is a hot market, but hot markets continue to stay hot for a long time.
And I'll be the one who's contrarian on this one and say, buy what's working. So truly, I just think if you look right now, where we are in this investment cycle, and that's why companies we think are interesting are companies like Mastech, right? This is a company that they literally build power plants, they build communication lines, they build transformers, and we're not gonna see this investment cycle slow down anytime. And in fact, you could even argue a bigger story than the AI investment cycle is gonna be the energy and utility investment cycle. And so it's just very obvious that the money that's going into these places is not slowing down. And if that's the case, our view is right now, there's different kinds of investing that work in different parts of the market. And I just think, we think that right now, this is a moment to be, focusing on what works you can lean into. We totally agree with you, Matt, obviously, right? We always talk about this idea, and just to be clear, any individual stock, when you start investing, should ever be more than 4% of your portfolio, right? Because of the fact that you do need to make sure that you don't have way too much idiosyncratic risk. And yet anybody who piles all of their investment into 5 stocks or even just only AI stocks, you're missing the boat. But in our view, if you think about how to down select right now, focus on what's working, because those are going to be the tailwinds, and tilt your portfolio that way. But obviously you should never be, to your point, all in on one theme.
I really love hearing the different perspectives that all of you have. And I do want to give people an opportunity. If you love hearing their different perspectives, you can hear much more from them in Vegas. I will be in Vegas with all 3 of these guys at the Stansberry Research event. If you want to join us in person, you have a QR code here right now where you can scan that or click the link in the description to get tickets to that conference and join us in person and hear much more from all 3 of these guys and their research on different stocks and different industries that are doing really, really well right now. They'll also have some other really interesting takes on what's happening in the economy. You don't want to miss what they have to say. So again, scan the QR code, click the link if you want to join us in Vegas. There's also an option to join us virtually. We hope that you can make it there. So much good actionable information here. Thank you all for sharing your perspectives. We love to hear different perspectives on this channel, so thank you very much for the conversation today. Let us know what you think in the comments. Do you agree with Rob, side more with Matt, or maybe with more of what Doc had to say today? We'd love to hear from you in the comments again. Thank you so much for watching today, everyone, and as always, happy investing.